Welcome back. You're watching Market Fatafat on ET Now, show where we get you all the stocks that are buzzing based on news flow and technicals. 30 minutes done of the show, and for the next 30 minutes on the technicals, we have Aamar Singh joining us. Very good afternoon to you, Aamar. Thank you so much for joining us on ET Now. And the first stock that you're going to talk about is Supreme Industries. How is this one on the charts to you? Do you think an attractive play to bet on?
Yeah, I would say that, first of all, thank you for having me. Looking at Supreme Industries, what we saw is that the stock from a long-term perspective definitely continues to be extremely strong, and the bullish momentum, be the quarterly charts or the monthly charts, they clearly reflect that the long-term trend remains intact. Yeah, on the intermediate-term trend, short-term trend, we did witness some sort of consolidation, the stock correcting towards 4,000 levels, and then again currently trading around 4,700, 4,720 odd levels. So this is one stock one can look at from a long-term perspective. Now, the key level to watch out for this stock is somewhere around 40, the current levels only. Sustaining above 4,700, 4,720, that's going to be important. If it sustains above that level, then it's marching towards the 4,800 levels. From a short-term perspective, it seems to have formed a base around the 4,550, 4,600. Long-term trend is very strong, and the momentum continues to stay strong.
Yeah, keep an eye out on those levels over there for Supreme Industries. Let's move on, talk about HUL, and why is this one in focus? Because of its numbers, no doubt. When you look at it, profits and revenue were in line, but volume growth, that was a miss. Volume growth came in just at 2% versus an estimate of 4% as well. Now, key highlights, the company saw an expansion in margins despite the higher ad spends. Home care as well as beauty personal care segments saw mid-single digit volume growth on a high base as well. But food and refreshments, that was a bit subdued in terms of volume growth over there. The company highlighted in the press conference that the mass products continues to see competition coming in from smaller players, and mass products such as some of the segments like the tea segment as well as in the detergent segment where they saw some pressure. So yes, keeping an eye out on that. The company said that they will be focusing on competitive volume growth going forward, and volume recovery will happen gradually is the word coming in from the management as well. But HUL today down and out in trade after a miss coming in terms of the volumes and overall an inline set of numbers from HUL.
All right, moving on, Cachi Industries is the other counter that's in focus in today's trading session. If you see the stock, it's gained more than a month after the supplier of the key drug ingredients, that is Cachi Industries, has formed a joint venture to expand its presence in Saudi Arabia. The stock at one point in time saw an uptick of as much as 12%. That is more since September 12th. Right now, trading with gains of about 7.8%. The company has formed a JV, Cachi Arabia, with Saudi National Projects Investments for the expansion in the region, and Cachi Arabia will be holding company and plans to set up a manufacturing facility in Riyadh that will initially cater to the local market and later the Gulf region. The JV will be 75% owned by the Cachi unit, with partner owning the rest, and that's the reason why the stock is rising in trade.
Okay, let's move on to the next stock on the technicals. And Aamar, you picked out New India Assurance for us. When you look at it last 6 months, around a 45% return is what the stock has seen. What are you expecting at 149? Still an upside is what we could expect?
Yeah, I would say that if you look at New India Assurance, this is one stock which has moved up, but comparatively at a slower pace compared to many of the other stocks. And what we are witnessing on the long-term charts, some of the indicators have turned positive after, I would say, many years. So that's a very strong sign for the particular stock. Now, what the stock needs to, for any significant rally on the upside, the stock needs to sustain above the 160, 180 zone. So currently it's around 150. There's a potential for further upside move towards 180. That's a level to watch out for. On the upside, because there the stock could meet with some sort of selling pressure or profit booking. Also, what we've seen is that over the last couple of weeks, not couple, I would say 4 or 5 weeks, we've seen some significant increase in volume per se. So on some very strong moves, we've seen significant volume. So that also reflects that a lot of buying, selling has been happening at those levels. And currently also the volumes have seen an uptick. So the trend remains positive. So one can look at, on the long side, the level to watch out for is 180 on the upside as a resistance level.
All right, moving on. Harsh, PTC India, why is this one in focus?
Well, yes, so there's an announcement coming through that PTC India would be disinvesting from its subsidiary, which is PTC Energy Limited. Now, the equity value which they have received with regard to the bid that was approved by the board was of 925 crore. Just to try and understand or break this down a little further, PTC India's market cap is actually just about 4,500 crore. So 900 odd crore of value unlocking happening in PTC on the back of that bid submitted by ONGC Limited. So of course certain CPs etc. conditions precedent still need to be adhered to, but other than that this deal is a go, and therefore you're seeing the stock up 6%.
Let's move on to the next one, and that is Havells. Lisa, this one is under pressure as well after its numbers. What were they looking like?
Right, so Street has given a thumbs down to Havells' earnings because the earnings didn't meet the estimates. And talking about the revenue on year-on-year basis, it was up 6%. The revenue, the top line, that was impacted mainly on the back of Lloyd and as well as the ECD segment. Talking about the EBITDA, though it was up 30% on year-on-year basis, the margin also saw an expansion, and it stood at 9.6% versus 7.7% seen last year. But still it was below what the Street estimated, and even the brokerages has given a thumbs down to Havells. UBS has cut the target price to 1,880 from 1,900 earlier, and they said that B2B versus B2C divergence that sustains, and the demand and capacity ramp up, that is the key for the rating going forward, for the re-rating for Havells. Nomura has maintained a neutral on Havells at a target price of 1410, and they added that the key miss was mainly because of the wire and cable business. So yes, Havells is reeling under the pressure on the back of weak earnings coming in.
All right, moving on. Aamar, Bombay Dyeing, why is this one in focus today, or rather how are the technicals for this one looking like? Because this the group companies are a bust today.
Yeah, I would say that Bombay Dyeing, if you look at it, the stock has rallied significantly from almost 60 levels in April, and currently it's around 170 odd levels. So clearly, if we look at the charts from a long-term perspective, I'm talking about the quarterly charts and the monthly charts. So they give us a holistic picture from a long-term perspective. So what we've seen is that the stock was earlier finding very strong resistance around the 110, 120 zone. So that has been taken out. The stock is trading significantly above that level. And even the volumes have been significant. One of the indicators from a medium-term perspective that reflects some sort of overheating of the particular stock, but still the long-term trend is very strong. So any correction pullback should be used as a buying opportunity. And this is one stock one can definitely look at from a long-term perspective.
Stock one can look at from the long-term perspective. But let's move on, talk about ITC. That one is down and out in trade after its numbers came in as well. Overall profits and revenue in line, but margins, that was a bit below the expectation of what the Street was doing. Working with. Other than that, when you look at the cigarette volume growth, that came in at around 4 to 5%, you could say, is what the cigarette volume growth came in at. FMCG, hotel business as well as cigarette business, that saw strong growth on the back of a high base. Hotel business obviously was supported by other G20 as well as travel trends that have picked up as well. And the demerger for the hotel business, the company highlighted, is as per the scheduled timelines that they've given. So yes, keeping an eye on that. Agri, paper business, that is continuing to be under pressure even this time as well. Agri in terms of the segment is something that is under pressure for the last couple of quarters, and what the management highlighted this time, that the value added products in terms of exports for agri, that saw a bit of an increase coming in. Company also highlighted in terms of increasing competition coming in from smaller players for the FMCG pack as a whole. So let's keep an eye out on ITC today. Obviously, given up all the gains that we've seen, actually was trading in the red, and let's not forget the stock had been buzzing since the last year as well.
All right, moving on, let's talk about Century Textiles, because that particular counter came out with its numbers a short while ago. If you will see Century Textiles number, the counter has actually posted loss on a year-on-year basis as compared to a profit a year ago, and the numbers are like it posted a loss of about 32.8 crore rupees as against the profit it actually posted a year ago. Let me take you through the finer details of the numbers. The sales came in at around 1,087 crore rupees as against 1,211 crore rupees, while the loss stood at around 32.9 crore rupees against a profit of about 70 crore rupees on a year-on-year basis. And post these numbers, you saw a sharp slump in the stock price. At one point in time, it was down approximately 9% or so. Now it's trading low by about 5.5% as we speak.
Okay, let's move on to the next one, and that's on the technical. And Starlight is a stock that you've picked out for us, Aamar. What are the charts indicating for this one now?
Yeah, I would say that the stock is forming a bottom because the stock is in for consolidation. We haven't seen the stock, I would say, really taking a direction. But what we witnessed for the last few trading sessions is that the stock has bounced back from 150. It's trying to breach the 170 because 170, 180, that's a zone of resistance for the stock. And some of the technical indicators from a short-term perspective, they appear to be positive. Yeah, long-term technical indicators points towards more consolidation. So I would say above sustaining above 170, then the stock has a potential to rally towards 185, 190 levels.
All right, moving on. Harsh, Jindal Stainless, why is this one in the spotlight today?
Well, results, numbers, Cheryl, and what you're seeing is a solid set of numbers delivered by Jindal Stainless. So let's start off first off with the revenue. 9720 crore is where the net revenue has come in at. Slightly lower, around 2-3% lower than what it clocked same time last quarter, but definitely higher than the 8,500 number that it clocked same time last year. You're also seeing EBITDA jump by over 50% year over year, flat quarter on quarter again, that EBITDA number. And profit after tax as a consequence has also nearly jumped up by 60% over the last year, and again flat QOQ. Also, there's been another announcement by Jindal Stainless with regard to exploring various options to sell, liquidate or divest two of its foreign subsidiaries, namely PT Jindal Stainless Indonesia and JSL Group Holdings PT Singapore. They've also, of course, declared a dividend of 1 rupee, but this divestment could also be some amount of value unlocking, which will be in store for Jindal Stainless. So, on the back of all of that, the stock is up alive 4% higher.
Okay, that is Jindal Stainless. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
Welcome back. You're watching Market Fatafat right here on ET now. Let's continue with all the stocks moving in trade then. And Lisa, coming to you, Elon Engineering. Why is this one in focus?
So Elon Engineering is gaining on the back of good results posted by the company. The net profit, that's up 37% on year-on-year basis at 88 crore. While the revenue, that was also up at around 25%. EBITDA also was up at around 28%, and the company also received an order of around 51 crore, and this is from ArcelorMittal Nippon, and this includes the design, engineering, manufacturing of pipe conveyors. The said order is will be commissioned in the next 24 months. On the back of order being received and also on the back of good set of numbers coming in from Elon Engineering, the stock is up around 2.6% as we speak.
Let's move on to the next one, and PBGuills, Aamar. This one has seen almost a 50% return in just 1 month. What are you seeing in terms of technicals for PBGuills? Where do you see this headed?
Say that if I look at this particular stock, so what we are seeing is that the trend from an intermediate term perspective, that continues to be extremely strong. Long-term trend has been positive. We did witness some consolidation earlier also. The stock, if I look back, so somewhere in the month of June, the stock had tried to reach the 90 mark, but it was not able to sustain above that level, came down all the way down towards 60. But again, now we are seeing that the stock reaching the 100 levels, and also there has been a significant increase in volumes, with what we are witnessing. And some of the technical indicators from a long-term perspective, they augur well for the stock, because the stock is trading at record highs, and there is a potential that the stock could witness a significant rally from here towards 120, 125 levels in a medium term.
Okay, let's keep an eye out on PBGuills over there on the technicals. But let's move on, talk about United Breweries. This one came out with its Q2 numbers. Overall, when you look at the numbers, it was not that great set of numbers coming in. But volumes, that saw a recovery, while EBITDA was 3% ahead of what the street was expecting. Volumes grew by 7%, predominantly driven by Telangana, Orissa and Rajasthan, partially offset the decline that they saw in Delhi, with premium growing ahead of the total portfolio. Premium segment grew by 10% YOY, and also in terms of when you look at it, they saw a double-digit growth in terms of Kingfisher Ultra family, as well as more than 20% contribution in Heineken's, as well as silver to Heineken's franchisee as well. So all in all, yes, weak set of numbers, but volumes saw a good recovery, as well as EBITDA performance was ahead, which is keeping the stock abuzz as well, trading with gains of 2.8%. 0.5% as of now.
All right, moving on, let's talk about RVNL then, Harsh. And why is this one in news?
Well, a couple of order wins for RVNL, and that order pipeline continues to lengthen. Let's look at the couple of orders that they've won, both for the Vadodara division of the Western Railway. One is a 24-month tenured order with a value of 246 crore rupees. And another one, again, another 24-month tenured order with a value of 174 crore rupees. So a total order value of roughly 420 crore is what RVNL has won. Of course, in focus at the start of the day was up and away. In fact, the stock in trade now currently around 4% higher.
All right, moving on, let's mark Hindustan Zinc because the numbers are just trickling in. If you look at the consolidated revenue, it's coming at around 6,791 crore rupees. This as against the revenue of around 8,336 crore rupees a year ago. So yes, sharp drop coming in on revenue front. If you look at the EBITDA margin, is coming in at around 46.2 versus 52.9%, and that's why actually if you see the stock is actually taken a nosedive right after the numbers, 2% downtick right now as we speak. If you look at the consolidated profit, 1,729 crore rupees as against 2,680 crore rupees on a year-on-year basis. So a weak set of numbers coming in for Hindustan Zinc. You can actually see the stock actually react to those weak set of numbers for Hindustan Zinc right now, Vinny.
Absolutely, a weak set of numbers, but look at it. As of now, I'm looking on the ticker as well. A very flip-floppy. I would request the producer to just refresh the chart as well, because seems like again it started making a recovery as well. So that is something to watch out for in case there's something coming in terms of the commentary as well. From 2%, it's now around just trading with cuts of almost 0.5%. So let's keep an eye out on that. But yes, some bit of a recovery seeing there, but a flip-floppy day of trade coming in as of now for Hindustan Zinc. Number surely seems very weak over there. But let's move on and talk about another stock that is in focus on the back of technicals, and that is MCX. Amar, this one has been buzzing in trade for the last couple of trading sessions as well, seen a good up move. What are we expecting in terms of charts here? What is the indication?
Yeah, I would say that if you look at MCX, the stock was consolidating. Earlier, it was unable to breach the 1600, 1700 level, and then it managed to breach that level, and with a lot of volumes. And currently, it's around approaching the 2300 mark. So technically, if you ask me, the long-term charts on the monthly charts, they continue to be very strong, and some of the technical indicators they have, they clearly indicate that the momentum is there to stay. And even the intermediate term trend is very strong, because what happens is that the trend could be up, but the momentum is more important. So in that case, what we are seeing is that both from a medium term and the long term momentum perspective, as well as the trend, the stock continues to be strong and positive. Yeah, it has run up recently quite well. So ideally one should look at some corrections to enter the stock. This is a stock one can look at from a long term perspective.
Alright, that is MCX for you, and that indeed is the last stock that we'll address on this edition of Market Fatafat. Thank you so much, Aamar, Vaishali, as well as Harsh and Lisa for joining us on the show and taking our viewers through all the stocks buzzing. And viewers, with that, we come to the end of this edition as well as this week's edition of Market Fatafat. So it's a goodbye from Vinny, myself, our producer Snehi, and our director Trevor. Thank you so much for watching us.